Hi, everyone. This is Jason Burack of Wall Street from Main Street. Welcome back for another Wall Street from Main Street podcast interview. Instead of a normal interview, Aaron from Carnivore Trades and I will be doing our annual review and preview of the year. So we're going to do our 2025 review and 2026 preview here on Monday night, January 12th, 2026. Happy New Year to everyone listening. Aaron, thank you for joining me.
Good to be back.
So you're on what, episode number 245? I just put that out this morning for This Week in Charts. So congratulations on that. That's almost 5 full years, right?
Yeah, I was going to say it started, I want to say April of 2021.
Yeah. So you're almost what, 52 weeks, 52 weeks in a year. So you're almost to 5 full years.
Yeah, it's getting there for sure.
Well,
Been a
you've
long
done
ride.
you've improved enormously, man. I mean, like you just crank these thing out. You're really, really good. So 20 minutes or less, very efficient. I think there's a bunch of copycat videos that are doing this now. Because I remember when I suggested this idea to you years ago that like there was traders that would ramble on a webinar going through all these charts for 90 minutes, 2 hours, 3 hours. And I was like, why are they doing this? Why can't they just be succinct with it like what you've done here with your show?
Yeah, and especially now, it's in this social media age too. Like, the longer you're talking, I mean, the more fluff that you're going to put in there, it's just going to be harder to hold people's attention. So you gotta, I mean, people's time's valuable now. So you gotta really just get it out, get the important information, and that's really all it really needs, 10, 15 minutes most of the time.
Well, yeah, and people also have a very short attention span, so you want to try to be efficient with people's time, even though this is a free podcast. So the S&P 500 is just under 7,000. The US dollar gold price, wow. The US dollar gold price, it's rocketed up over the last 12 to 18 months. It hit $4,600 earlier today, a new all-time high. It seems like every couple weeks now, and we're doing that. And the silver price finally, the silver scenario that the silver bugs have been talking about for many, many years, we finally got to the scenario here where the exchanges, the LBMA, the COMEX, they don't have the metal. And the industrial end users in China and India, so your electronics manufacturers, solar panel manufacturers, jewelry people, they actually want delivery of the metal, and the exchanges do not have the metal. And so now we have a scenario where the silver price, I mean, it's going for right now, the spot price, Aaron, is at $83.96, but in certain parts of Asia, it's up to $120. It's way over $100 an ounce for physical silver if you actually want the metal.
Yeah, and from what I've heard, the reports are that, even JP Morgan has flipped their position as of, I want to say, late November. So, and that's kind of when it started to go parabolic. So probably not a
That would be a
coincidence
smart
there.
move on their part. Yeah, that would
Yeah.
be if they did go long, that would be a smart move on their part because now they're not going to get the market. But someone has a short position though, so it looks like the exchanges are not doing well, and there are bullion banks that do have the short position. It might not be JP Morgan. I think I remember like 18, 24 months ago, I think the short position, a lot of it had passed to Bank of America, but maybe another bank took it over. So I'm not exactly sure, but let's get into the show here. We're going to try to keep it around 90 minutes or less because these shows normally go pretty long. So let's just talk about a quick review for your thoughts on 2025, what happened, any calls you might have missed, and in general, what you think happened in 2025. Was it another year of asset price and a lot of asset price inflation where there was a lot of problems in the real economy showing, potentially recession, or these industries were not doing well, and yet asset prices like the stock market, a lot of them continue to go higher?
Yeah, 100%. Going back to the beginning of the year, I was looking for, we'll talk about maybe one or two things I was accurate on, and some things that I missed. But one thing that was pretty accurate is I was looking for a Q1 kind of correction, in stocks and in general. We did get that. Went a lot deeper than I thought, specifically the last couple of days. But probably one of the better calls I had, was getting the bottom in that pretty close. And I said, just hold this throughout pretty much the whole summer. You'll do pretty well. And that ended up working out fairly well. I didn't think that we were going to finish the year as strong as we did in equities, but the trend was up the whole way, and we had some choppy periods where we said, we got to be careful here. We saw some problems with Jeffries, a lot of private credit, issues there, some issues with repo, but it never really materialized into stocks, I think.
It it
And
didn't
I
spread. Yeah, it didn't spread
right,
either from bank to bank to bank to bank to
right.
bank, or at least not yet. So
It,
like there's extended pretend games what in 20 similar to maybe 2022 where Silicon Valley Bank and one other bank decent sized regional bank got into trouble, and then you had what the BTFP, you have the FHB
yeah.
go to 2 trillion. I mean, I even saw recently that quietly with the Inflation Reduction Act they snuck in commercial real estate developers are getting enormous subsidies and loans to transition these office buildings over to residential. So they've been playing these games for a long time to prevent, mass bank panic, bank spread, where the banks go into contagion and one bank fails and then the next bank fails.
Yeah, and I warned about that too. I mean, I saw the performance in stocks like Blackstone, heavy in commercial debt, or excuse me, public, uh, you know, public debt issuance and public credit, excuse me. They had, a horrible year, but I warned and I said, look, they're not gonna, if this doesn't materialize in stocks and we don't start seeing risk assets start to sell off quickly, like it's gonna be over. The Fed's not gonna wait. They're not gonna wait to plug the holes in repo. And they did, so it seems right now it's mostly under control. I will say, I can say anecdotally here though, I do see problems in the private markets, particularly real estate. Um, just in this area, it has cooled off substantially where I am, and I've firsthand experience with that.
You mean
But
residential real estate?
yes, yes, and in a very hot market here in Florida, and it is not hot right now at all. I can confirm that
Well, look at
firsthand.
all the press releases that Trump is talking about what buying mortgage-backed securities to try to lower interest rates. He's threatening Jerome Powell that they didn't lower rates enough, and now there's what charges against Powell. I think the cover. So maybe we'll talk about that, but we want to stay on point here first with the review of 2025. So I'll talk about that too. So I think like one of the main themes here is a lot of the deflationistas that are like, oh, there's a recession, it's going to be recession. Oh, there's going to be a stock market crash. What I think they're missing, Aaron, also is that there's been a weak dollar. So when you have this currency creation and the money supply is growing, when you have a weak dollar, that's normally good for asset prices. It's the strong dollar raising interest rates. That's where something normally breaks and causes what a margin call, deflation, some type of credit freeze.
Right.
That's what normally causes the problem. So like if the as long as the dollar is not being rapidly devalued, so if it's being devalued but not rapidly, so I would say that overall a weak dollar because the dollar was very very weak, and I think like the dollar as a percentage of global reserves is down. We know that like the BRICS countries, the non G7, they're not buying a lot of U.S. Treasuries. The central banks are not. They're dollar cost averaging gold tonnage each month now. It's been the major macro theme that you and I have been talking about for years now, really since the Russia sanctions. That was the paradigm shift where the amounts increased enormously.
Yeah, and I mean, you and I were talking about, like Belt and Road, back in what, like 2012, and things like that. And
Well,
it's a
that was a scam.
process.
That was a scam though, because actually they used dollar denominated debt. So they're like, "Oh, the yuan's going to be internationalized." That actually the whole Belt and Road thing was debt diplomacy to get access to those natural resources ahead of time, because China wanted, the arable land to grow, and they wanted make works jobs programs, and they wanted access to ports and access to copper mines and other key metals. But now we're seeing like the U.S. scramble. We'll talk about that later in the show, though. But for 2025, I mean, like there was like a lot of with the weak dollar, other countries were printing money supply was still growing. Aaron, I think one of the major important things for our listeners out there, I talk about this a lot now the last like 4 or 5 months, because the hedge fund manager told me to take a look at this more, was the global M2. The global money, that's the global money supply. And so that's like high powered base money. It's not just the US, it's European Union and China, Japan, other countries. The global M2, global money supply, it's almost to 100 trillion. And it's up enormously since like 2017 or 18. I think it was like 45 trillion. So it's gone from 45 trillion in like 2017 or 18 up to 97 trillion now. And there's no hint it's going to slow down.
Right. You just look at bond yields of, pretty much every country. And then you look at, asset prices, hard asset prices, what we're seeing now. It's no wonder that this has been the response here. And if you talk about other asset, look at beef prices. I mean, I'm looking at a chart of feeder cattle right now in 2025. It's pretty much parabolic the entire year. And right. So it's not just hard assets. It's at the grocery store, which never gets talked about in the reports, but that's the reality for everyday Americans and everyday citizens of the world.
Now, I'll talk about the call I missed the worst on in 2025. That was the oil price. So I was predicting an oil price rally up to like 85, $90 a barrel by I think end of Q2, Q3 of 2025 because it's normally summer driving season. I thought demand would pick up. Now we are seeing signs that oil price is putting in a bottom though. So over the last like 2 or 3 quarters, so 6 to 9 months, we've seen a lot of the oil companies in the United States and Canada drastically cut back on their capital expenditure. So
Yeah,
so that's a sign that like they don't think the oil price is very attractive. With the oil price right now, let me pull it up here. West Texas Intermediate is about it's just under $60 again, but it's been in the low to mid 50s now, range bound for at least a year. I would say it's been in a range. It's not at a good economic price though, where a lot of marginal barrel of oil, a lot of higher cost marginal barrels of oil are economic though.
yeah. Last year, I thought, excuse me, I thought we would have a decent kind of like second half of the year, like towards that Q2 with crude prices. That really wasn't the case so much. We had the spike with the Iran situation. I did get the call, I said to oil equities, XLE, those types of names would rally in January, and they did pretty good, and they did have decent Q1, but they've been sideways. I do think this is the trade though, right here. And I've been at, owning Exxon shares for a while here, and it is just starting to break out to new highs right now. And obviously, the situation with Venezuela certainly helps out. But I think, right now, what's the only commodity that hasn't really run? And I know that the administration is hell bent on keeping it down, but you've had a lot of negative news lately, and the price has been putting in higher lows here. So that to me says that there's, a surplus of sellers that are already in, and they're unable to push price lower here. So I think crude's attractive here. Got to break $60 from a technical level. If it can do that, you could have some good legs to the upside here.
Well, ExxonMobil and Chevron are also two of the lower cost producers. So they can still make a profit with oil around these current prices. But some of the other higher cost producers are not exactly very profitable. So they've been doing more rapid cuts on their businesses. So even companies that are doing acquisitions that did like a $15 billion acquisition up in Canada, a mid-tier company, Whitecap Resources, they did an acquisition 7 or 8 months ago, and then they drastically cut back on capital expenditure after the acquisition. So they went and bought the assets, and then they cut the capital expenditure by 20 or 30%. So you've seen a lot of that in the industry consolidation. The industry was setting up, they're going to setting up to try to be more efficient, leaner and meaner coming out of this. But really at the current price, there's not a huge incentive to invest in higher cost oil. And yet Trump is trying to get. I saw an interview on Fox Business today with Harold Hamm of Continental Resources. He said at least 100 billion would be required to invest into Venezuela to get their oil production back to levels from 20 years ago. And he said that was probably on the low end.
Well,
So, I mean, that's going to be, look, I think this is going to be a theme going forward where Trump is going to say there's no inflation. He's going to point to low gasoline and low oil prices. I think that was one of the main reasons I was wrong about the oil price was that it was policy. They wanted to keep the oil prices low. And I didn't understand how that fits. I didn't understand the level that fits within the technology arms race and the Cold War 2.0 with the U.S. and China and all the stuff, policies that the Trump administration and the Pentagon have planned for what natural resource security, what Trump just cited, the Monroe Doctrine, which is where they want control over what the naval seat in the naval areas and all the natural resources in the Western Hemisphere. And you're seeing a lot of those policies now play out where China, January 1st, they put in an additional export ban on silver. They had
yeah.
export bans on key strategic metals for rare earths and other strategic metals. And then to counter that, what the U.S. then moves 20% or so of the naval fleet into the Caribbean for Venezuela to regime change in Venezuela. And then all the investments that are going now into the US for a supply chain, and there's a ton of them. So I'll just quickly rattle a few of them off. So you have Taiwan Semiconductor, a new announcement there, the bailout with Intel Corporation. That's for the semiconductor side. So Intel got a bailout because they had problems there with the
But they were getting sued, weren't they? They were going to get sued.
yes,
I
there
don't
was
think,
also
yeah.
fraud with the
Nobody
CHIPS
talked
Act.
about that.
Well,
Yeah.
but it looks like now Intel may have turned it around. The new CEO they brought in is really good at the nuts to bolts, all the entire value chain for the semiconductor. And Taiwan semiconductor facilities in Arizona had immense problems over the last couple years trying to get like all the chemicals needed, the clean water, the clean air at the semiconductor chip fabs to get it. And it looks like finally they've got things fixed after many, many billions of dollars in about 3 or 4 years, longer than they expected. But all these investments, you're seeing in the headlines, Aaron, now with the Trump administration, the Pentagon, and private sector companies in the US negotiating partnerships with Korean firms, German firms. So these are for uranium, nuclear power uranium enrichment facilities. I think 3 companies, US companies, just got funding for additional uranium enrichment facilities. So the US is not reliant on importing Russian enriched uranium. There for nuclear power plants, you have an announcement where I think 40% ownership is going to go to the Pentagon for silver processing and other key strategic metals. You have new partnerships for rare earths processing facility in addition to rare earths mining. So you're starting to see the supply chains. We're in, I think the new normal now, Aaron, a key theme, and it's not just for 2026, is going to be that the global economy, the quote unquote free markets, and they're, not fully free, but they were more free market, what a just in time supply chain, that era of a just in time supply chain where the goods go on a container ship all the way across the world and then come back on a container ship, back and forth. That era is coming to an end. The countries like the US and China are going to be focused on reliable supply that's closer to home or within their own borders now.
Yeah, 100%. And to the other, the free market too. It's really, and you've been using this term a lot. It's like the haves versus the have-nots. That's why I like stocks like Exxon and Chevron. But if we go into Venezuela, they're the ones that are going to get the government guarantees, the government-backed agreements. They're the ones that are going to get the military protection. And I hate to look at it this way, but that's just the reality of it, right? We saw that
Yeah.
with the chip stocks.
Well, you and me
doing
aren't
deals
gonna
with
you
Intel,
and me are not gonna get a vote, Aaron. Sorry to interrupt you.
Right,
You and me are
right,
not gonna get a vote about how much money gets printed to buy
right.
Greenland or how many military bases are going to get opened in Venezuela. I mean, like, okay, you elect one politician and that politician is anti empire building in Venezuela or anti-military base in Venezuela. Well, who knows who's going to fund that politician to be voted
Right.
out a couple of years from now in the midterms.
Yeah, and I mean, you were saying $100 billion, earlier. Isn't that like what was on the receipt like every other month for Ukraine a few years ago?
Okay,
I
that
mean,
is just for the oil. That
pretty
is
sure we
just for
can,
the oil industry. Okay, so
yeah,
Harold Hamm said
yeah,
that's just for the oil industry. That doesn't count building normal infrastructure and having military security. So that's just for the oil industry. That's just pipelines and refineries.
I gotcha. I was going to say that seems kind of cheap, but that's not that bad compared to what we've been doing for everyone
No,
else.
no, that's just for oil pipelines and refineries. That's just for the infrastructure required to get the Venezuelan oil industry from 1 million barrels per day or lower now. I think it's down a little bit
Yeah.
below 1 million barrels per day, back up to the old levels of 3 or 4 million barrels per day. So he said their internal numbers were at least 100 billion on the low end, but it's probably more than that. But I mean, if the US is going to be there permanently, it could end up being a boondoggle similar to Iraq or Afghanistan, where it cost, I think, the US taxpayer $9 trillion for 25 years post 9/11. By the time the U.S. left Afghanistan and moved a decent amount out of Iraq, I think the estimates are at least $9 trillion.
Yeah, and the ironic part is by the end of it, it wasn't costing them that much at all, and then they left anyway.
Well, that was botched. Yeah,
Yeah,
the departure part was, oh my God, I don't even want
yeah,
to talk. We have
yeah. We got off track here. Yeah.
but I think the key theme here is that the people, a lot of the people are going to say, oh, there is no inflation. And it's like the estimates here to move the supply chains back. I was actually looking this up before. I was using artificial intelligence software to do some additional research. The estimates are saying, Aaron, to move the supply chain back, and so value chain for the U.S. to have rare earth processing, uranium enrichment, more silver processing, all those things to start moving more of our domestic supply chains back. The costs are going to be at least estimates right now, at least 20 or 30% higher across the board.
Yeah, and I mean, we are in an arms race, right? Which is another word for a war, right? I mean, war is incredibly inflationary. It's incredibly
Well,
bullish,
put
right? You
put
know,
tech put tech
right,
arms race in front of
right.
that, because really it's about five or six key technologies, and it's not just artificial intelligence. Go and watch the new stuff from the 2026 Las Vegas Consumer Electronics Show last week. They are taking the AI software and using it as an operating system. It's going into better versions of driverless cars. It's going into
Yeah,
better drones,
the
better robots.
robotics.
It's, yeah,
Yeah,
everything.
yeah.
The improvements in some of these things, Aaron, is insane. I mean, 3 or 4 years ago, some of these robots, like they were on a cord and they'd fall over. So they could barely hold a charge. They were on a giant cord to be plugged in. And now they can, some of them have way better dexterity and movement than most human beings.
Yeah, I've seen a lot. I think they just deployed some in San Francisco, I want to say.
It depends. Oh, those are the home robots. So the home robots, there are
Yeah.
huge issues with those moving around the house. They're more efficient at a factory. So Figure AI Robotics has been running at the BMW factory in South Carolina for over 6 months every single day. So the factory robots are better. They're not having nearly as many issues. The home robots, but I think the what the average person who's listening to this needs to understand is this is the worst it's going to get. So the artificial intelligence research software, yeah, some of it's slop. Yeah, if you're asking it for legal research and casework, it might invent some legal cases or make mistakes on that, or medical advice that'll make mistakes. That's the worst it's going to get. There's going to be constant improvements going forward, and the same thing for the robot. So it's going to be constantly improving. I think that's what the average person misses, because they just say AI bubble, AI slop. There is a bubble with valuations, but the technology is legit and it will keep improving.
Yeah, and the government is going to keep subsidizing it. So it's going to be really hard to fight something like that. It's not like with the internet, everybody compares it to the internet bubble, but last I checked, the government wasn't literally subsidizing with billions of dollars like almost every day for these companies for R&D and for everything else that they need, like catering, literally catering on a silver platter to their every need.
Oh yeah, oh yeah, because you just hear this on TV. They mention artificial intelligence software as a national security issue. That if China takes a huge advantage over the United States, that they get an advancement in artificial intelligence to artificial general intelligence or supreme intelligence, or they get a huge advantage in quantum computing, then they could break all man-made encryption. So the people in power, and look, I don't endorse all the spending, obviously, but I don't have control over this. So as a investor, you kind of have to position yourself to where if the government's going to spend the money anyway for commodities and natural resources, I mean, Aaron, we were ahead of time. Remember, you and me were way ahead of the pack on Cameco, uranium. We were talking
Oh
about
yeah.
this way before anyone. I
Yeah,
found those charts
2021,
for
yeah, yeah.
I found those charts for the electricity demand growth for the data centers and projections. I was finding those at least 6 or 12 months before other people. I was digging through a lot of the papers there. So people are like, what are you talking about? I was sending these to all the newsletter writers that are making it like they discovered it now.
Yeah, I remember that was like one of the first kind of like videos I was like the one of the first like deep dives I did was on uranium. And that was when everyone hated it because it was in a bear for so long. And you got the and that was in fact the kind of the premise of the video was like we've reached bear capitulation here. This should start going up now. And yeah, that was like in early 2021, I think. So
It was cheap and it
um
was hated. I remember
yeah,
when Cameco's was stuck in a trading range between $8 at the low end and about
forever.
22. Yeah, it
Yeah.
was years. It
Yeah, it
was literally
sucked.
years. And so
Yeah.
I was researching, I was going through the company's financials, their presentations, like the company, like if you just chopped it up and sold it, and sold off all the assets, it's worth way more than $8 a share. So the risk reward was good as a contrarian value investor looking for undervalued growth. that was good risk and reward. I see similar things for oil and natural gas. So there's a lot of good valuations there, depending upon where you look. And then I also see similar risk reward valuations for the rare earth processing. So not rare earth mining, but the actual processing, making the value added parts. Because there's a lot, all these new technologies, robots, drones, parts of the data center, they all need either rare earth permanent magnets, electric vehicles, which are going to benefit a lot, I think, from the artificial intelligence software improvements. Some of the news releases that have just, some of the product releases that just came out, Consumer Electronics Show, they're showing like the next generation improvements of the software for driverless cars.
Yeah, and
All
that's the
these
thing
things are going
too.
to require, and I think this is part of what the technology arms race and the resource wars and the US and China, what in a Cold War, they all realize that all these new technology innovations, the amount of energy, electricity, raw materials required is astronomically higher than what we thought we needed, like the estimates for.
I honestly, I mean, you see it right now. Like, I worry about the system because there's constantly server outages now all the time. Cloudflare is always going down. There's lapses all the time that we never were. And it's like this is we're building things too fast for the capability that we have. That's my take.
Oh yeah, I mean, and China's building. I think they have 40 nuclear power plants under construction. They were building in the past one coal-fired power plant a week. I'm not sure if they're still doing that pace, but they were
Jeez.
for many years. Yeah, well, but they upgraded, they retrofitted or upgraded the old coal-fired power plants. They added the clean coal scrubbers. So the coal pollution isn't as bad, and they're the only, China and India are the only two countries that are importing massive amounts of coal right now. So but I'm more bullish on natural gas and oil. I think for the valuation for oil, nuclear power, obviously nuclear power is cleaner. So the next generations of nuclear, we need to spend a lot of money on research and development for next generation nuclear power. I think we can be a lot more efficient than the current nuclear power plants. But we should honestly just build across the board because the amount of energy and electricity that is needed for all these new technologies is way higher than anyone was anticipating 5 or 10 years ago.
Yeah, and this is all going to cost a lot of money. And really, the only way to get it is to, I mean, we don't have we don't have other countries buying our debt the way that they were before. And I mean, this is all everything you're saying, everything we're talking about here is just all I hear is just inflationary, not just for the U.S. but for everyone.
Well, the main theme here, and you brought this up, inflationary, no one buying debt, it's not just the US, all these governments.
Right.
So it seems like we're kind of back to the 1970s era where the worst asset class, the worst performing asset class the last couple of years has been
Fixed
government
income.
bonds,
Yeah.
has been government bonds.
Yeah.
And I think that's going to continue. These deflationistas that keep predicting that, oh, there is no inflation, there's no evidence of any inflation, the rally in government bonds is just around the corner. I mean, some of them have gotten absolutely blown out of the water. They've been lying and hiding about the amount of returns, the losses that they have. One of the guys just closed his newsletter. He claims he sold the newsletter for a macro newsletter for an enormous profit, but why did he shut down all of his social media? By the way, he was a bond fund manager at an investment bank. He was fired from that too. I think he blew up in the repo crisis in 2019. And now the speeches with Jerome Powell sounds very similar to the repo crisis in 2019.
We won't see, in my take is we won't see any sort of actual asset price deflation. And of course, even if we do, it'll be temporary. But we won't see it until you see the twos and tens at about 100 basis points spread. And we're at about 64 right now. If you see that, then I think you'll see a rally in bonds, but it'll be cyclical.
Now I know you were predicting a rally in the dollar index, but all this stuff with Trump and Jerome Powell, the fight. I mean, the dollar index just got hit whack-a-mole again. A giant hammer just whacked it right back down. It's almost like it was intentional there to knock the dollar index back down after it was going to rally again.
It still has to clear, it held my support around 97 and three quarters. It has rebounded off that. It's got to clear 100. And my take here is I think a lot of people see the same thing that we're talking about, and I think that the market's positioned short here, and that can lead to upside surprises.
Well, you don't have to be a genius. You just have to listen to what some of these central bankers are saying, Aaron, because the central bankers are saying, look, we don't want to buy treasury bonds anymore. They're like, yes, the gold price is higher, but we need to diversify more of our foreign exchange reserves away from the dollar, away from US treasury bonds. These are the non G7 countries and the BRICS, because they see that, like, if they have some type of policy, they piss Washington, D.C. off, their sanctions, or the military, the naval fleet gets positioned around there. Look, I hope I'm wrong about this, but I think there's going to be more regime changes. I'm not in favor of them, but we were talking before we start recording. I would not be surprised if many, many billions is printed by Greenland, if the naval fleet surrounds Cuba in the next 6 months or less, and there's additional regime changes. There was a story that just came out an hour or two ago that Trump wants to send in like military on the ground into Iran.
Yeah. Yeah. I mean, I'm surprised it took them this long to start doing this stuff, honestly. I mean, it seems that they know that they're slipping behind in Asia right now. Like, I mean, that's what this is about, right?
Well, I think that's why one of the major themes, and we started talking about this around the Russia sanctions, and it increased a lot over the last, it's now almost 4 years since the Russia sanctions. It's a long time. So you have almost 4 years now, Aaron, post Russia sanctions, because that was early 2022. And then within a couple months, the central banks just started massively increasing their dollar cost averaging monthly gold purchases of gold tonnage. And now here we are, it was in 2025, the first time in many, many decades, I think it was 4 or 5 decades, that the total global reserves were higher in gold than they were in US Treasuries.
Wow, that's pretty crazy.
Well, you knew it was going to happen
And yeah,
eventually because you saw that
yeah.
each month all the central banks were not buying net buyers of treasuries and they were net buyers of gold. So you knew eventually it was going to happen at some point. Now, we're being called crazy when the gold price was still around 2000 because I remember there was a lot of, mainstream, because I'm sure you deal with this in the chart community. There was a ton of mainstream chart people saying gold's overbought, silver is the most overbought in history on RSI, the relative strength index. And there's been people literally, mainstream chart people, mainstream money managers, mainstream Keynesians on Wall Street that have been predicting crashes in gold and silver all the way up from like 2,500 gold and like 30, 35 silver every couple weeks. They've been wrong now for way over 6 to 9 months.
Yeah, I mean, you don't really fight. I was just saying this today. Um, you don't you don't fight those parabolic advances until it shows you weakness first, and then you can trade it. But I did call that. I did say that we would probably see a pullback. That was actually the 26th of December. I said, yeah, don't be surprised if it dips here, and it did the very next day. But bam, right back up.
Well, that's because
You
someone
know,
probably had. Are you seeing on silver? That's probably because someone had
yeah.
inside information China was going to ban silver exports.
Yeah, well, they've been increasing margin on it too, but I mean, a lot of people say like, oh, they're trying to whack it down. If we were trading rocks, they would increase margins. If something in the futures market is up, let's say right now, silver is 30, was at $40 like 3 months ago. This is a global commodity. If anything's up that much, they're going to hike margins. They're just going to. They're not going to take
Well,
risk.
but I'll tell
Like,
you, like the people actually need the metal that in the
yes.
past would have gotten delivery of a silver futures contract. They're avoiding the metals exchanges on COMEX and LBMA because they can't get reliable delivery. So if you're a electronics manufacturer or you make gold or silver jewelry or you make solar panels, you need the metal or you have to shut down manufacturing and production. And so if the COMEX and the LBMA and they claim to have a lot of inventory in the past. If they don't have the inventory, now you're hearing all these anecdotal story, Aaron, where like the manufacturer directly, they're going directly to the mining companies in Latin America and they're asking, can we buy supply directly from you because the exchanges don't have it and we'll even pay a premium.
Well, the exchanges, you got to be careful that they don't send you gold-plated tungsten. I mean, like, yeah, I wouldn't be
Well,
too proud of
I mean, they were doing that for years. Okay,
Yeah, right.
I don't want to go too far into that, but that was actually occurring. So I don't know how much more of that is occurring, but it was occurring a lot over the years, over the last 15 or 20 years.
Yeah, it's I can't imagine they getting away with it now.
Well, I mean, but if they're going to raise margin requirements, but if you're a manufacturer and an industrial end user and you need the actual metal for something, especially for the silver, you're just going to avoid the COMEX and the LBMA entirely because
Right,
they're not reliable.
right.
And so, like Elon Musk even talked about this. He has what SpaceX, he has Tesla Motors. He needs actual metal for a bunch of different things. He's like, well, we need the silver for electric vehicles. We need the silver for our rockets and our satellites. So silver's used in a lot of different things. And sometimes it's in what's trace amounts, and sometimes it's a couple ounces. I think it's a couple ounces of silver per electric vehicle. So, yeah,
Yeah, but
these things.
and that really saves the environment too. Mining
Well,
all
I
that
mean,
silver.
no form of energy actually saves the unless we actually crack nuclear fusion. Nothing actually saves the environment. All forms of energy have positives and negatives. I wrote a long article on this a couple years ago for patrons. There's actually no form of energy that's actually fully environmentally friendly. It's just marketed one way or another.
Yeah, of course.
Yeah, or whichever like special interest group or lobbying group or whichever political parties in power for subsidies or whoever decide they want to steal from the Department of Energy or from the Inflation Reduction Act, which was really like 70% the Green New Deal.
Oh yeah, that's another great alphabet soup program. And we're seeing this from the CARES Act. We talked about the repo stuff earlier, and you talked about. And it's amazing to me that most people don't even know this, but yeah, they stuffed that the SPV provision in the CARES Act. I'm not convinced that any of this stuff that the Fed wasn't already just buying. I mean, if you want to tell me that they've been doing QT this entire time, I just can't buy it. I just cannot believe that. We're looking at asset prices,
And then military spending. So you have what
right?
interest payments. So the officially what I think the budget deficits are projecting 1.8 trillion. The math just doesn't make any sense. So you had record amounts of tax receipts coming in last year in 2024, almost 5 trillion, but the government spent around 8 trillion. But a lot of that was wasted or stolen on a lot of different projects. So green energy, Green New Deal, Medicare fraud, what all those Somali daycare centers. Tons and tons, like in a ton illegal immigrants got a ton of freebies. There was like stuff on social media where illegal immigrant. There was one like teenage boy who was an illegal immigrant, and he had like almost $200,000 in debit cards that he had gotten in 30 minutes from crossing the border. I think the border agents were just handing it out.
Yeah, and it took a YouTuber to figure all this stuff out.
No, no way. They're actually bashing him. They're saying he made the whole thing up. So there's still people all over social media and the mainstream media that are bashing him, saying he made the whole thing up and it was taken out of context. Oh boy.
Yeah.
Meanwhile, just strict math here, Aaron. Interest payments on the national debt, and then the military spending. Military spending. Come on, the Trump is announcing what all these new toys he wants. What new battleships, Trump class. They got to upgrade this. I've seen estimates. There's rumors. The deal hasn't been announced yet. I've heard 250 billion of contracts for nuclear power plants. So I don't know if that's going to get finalized in the next couple weeks or month, but they're discussing offering for through the Department of Energy 250 billion with a B for nuclear power
Yeah, that's just for nuclear power.
in the United States. That's not counting other forms of energy, like you said, Aaron. That's not counting rare earths. That's not counting semiconductors. That's not counting Greenland. I really hope Trump doesn't do it, but I think like he will probably just print the dollars since we have world reserve currency and go and buy Greenland since they view it as such a key strategic location. And there's billions of dollars of metal under the ice, but they want a military base there. They want to set up a laser and satellite anti missile, anti hypersonic missile defense system and military bases.
Yeah, I mean, it's right now. It just seems like that if you if there was a time to go all in, it might as well be now. So I think that's their thought process. Like, uh, you
before
know,
U.S. loses world reserve currency.
right, right. Well, and it's like if this works out and we win the arms race, then we just double down on our hegemony. So we keep the reserve currency, right? Um, and if it doesn't work, then it wasn't going to work anyway.
Yeah, I agree.
You know
And
what
I
I mean?
think,
You might as well just go
look,
in
as a
at this
small
point.
government libertarian, I'm not in favor of any of this. I'm just saying what the people in power here at the Pentagon and the kind of the neocons with our foreign policy want to happen. Because, like, with Venezuela, I mean, like, if they're going to rebuild Venezuela, that we're talking like trillions of dollars it would take to potentially rebuild Venezuela. The oil industry is hundreds of billions, if not more. And in the entire country to fix the infrastructure and stuff, so it's stable in their economy, it would be very, very expensive to turn it around. But what the not only you have what the drug issue with the drugs going through there, but you also have what the petrodollar. So if the U.S. Oil companies have control over the oil supply there, that helps with the dollar as a world reserve currency and the petrodollar. And then what 10 or 15 years from now, we both think that if Venezuela is stable with military protection and stuff, Venezuela could turn into a mining powerhouse in addition
Yeah,
to their oil and
yeah.
natural gas.
If it works out, it has, they're not doing it for no reason, right? There is upside there, but it's going to be a long road, and that's why, I said, as soon as that happened over the weekend, I was like, if crude oil gaps down, money, just buy it because that has zero bearing on the current crude contract, and yeah, I mean, it's going to take a while. It's going to take a while.
Okay, so let me ask you about natural gas then. The natural gas price has been kind of range bound, kind of in a bearish range, because when it has a rally, it kind of ends up back down. Do you think with all these data centers planned, the amount of spending the US has for infrastructure and all the technology, potentially switching to what more autonomous vehicles? Because I'm seeing headlines that they're planning on rolling out a bunch of new robo taxis fleets in a lot of different cities and states now. So it's not just Google, which owns Waymo. It's like Uber. It's a bunch of other companies I think are also planning additional rollouts now with the new software. Over the next like 12 to 18 months, they're going to start testing them in a lot of cities. Do you think then that natural gas is due for a large rally?
It had a decent rally in Q4, which is off schedule. Normally, that's not the case. Q4 is usually pretty poor for nat gas. But going back to the last couple of years, the price of the futures market it's been putting in higher lows and higher highs. So there has been a steady increase. And yeah, I mean, there's a chance that that's the next one to run. I mean, we talked about, oil itself, which is kind of the misdirection play where it's, you know, beef prices are tripling and all these other. Oh, but oil's, gas is 250, so don't worry about it.
How have the agriculture stocks done? Since you brought up beef prices, are like the potash stocks, the fertilizer, John Deere, the agriculture? Because those shares, those companies, we've talked about those in the past. Those ones always seem to lag like higher food prices.
Definitely, Deere has done pretty well, but Deere's also they have a lot of defense, though, if I'm not mistaken, don't they?
For military contracts,
Yeah,
I'm actually
yeah,
not sure, but guess
I
what? They
believe
just rolled
so.
out a self-driving tractor that's AI powered with like LiDAR and all that. It's like they just released that at the Consumer Electronics Show. That's pretty impressive. So that's just on a field. And so
Yeah,
you can have a drone flying over it that would dust the crops or other stuff. And then you have a self-driving tractor that could save the farmers a lot of work if that thing is very good.
yeah. I noticed I still think NTR is okay, Nutrien, but it's you're right. These names always lag. They have had runs before. They don't get me wrong. They do go on
The
runs, but
farmers don't see,
yeah,
yeah, I've spoken to farmers about this, Aaron. So when the food prices go high, I've asked the farmers why the fertilizer companies don't do well, and what they say is that normally a lot of farmers have a lot of debt, and so fertilizer is expensive. So even if there's a higher food price, some of these farmers don't have enormous profits and they have a lot of debt and they have to pay off the debt, so they can't afford to go and borrow and pay for more fertilizer to increase to grow more and increase the crop yield because they don't want
right.
to take on the debt.
Well, and the costs are just higher in general too. So I mean, that's eating into their bottom line. Actually, I have a question for you. Just given the price of metals here, at what point do you, and not we talked about silver, but we haven't even talked about copper. But at what point do input costs start to drag on the economy?
I think the Trump tariffs already did that, man. I think we see that with a lot of restaurants. If you go, so we weren't planning on talking about this, but I think like the economy got people say K-shaped, but I would say it's like the ultra rich
Right.
affluent. So if you're a hedge fund manager, you don't have a lot of debt, or you use debt to go buy assets, you've done very, very well with this asset price inflation and the Cantillon effect for years now. While if you're a middle class consumer, upper middle class consumer, or you're a small business owner, these tariffs screwed you over bad. I mean, like the small business owners were getting screwed over disproportionately, Aaron, on the tariffs compared to the large corporations in many cases, where the large corporation got an exemption on the tariff or a lower tariff because they can either talk to President Trump directly on the phone or they had a lobbyist go and do it.
Right.
So,
Whereas,
so I would say
yeah,
there was already like a disproportion. We see this with the shares of the restaurants. So go pull up shares of what Kava,
started, yeah.
yeah, the bowl companies. So that's where like the younger adults they would normally go and eat out at like Chipotle Mexican Grill during the week or Kava, Sweet Green, some of those other Sweet Green's the salad company that was actually founded locally here by Georgetown University students here in the DC metro area.
The slot bowls.
Yeah, they call them slop bowls, but I mean they have some healthy ingredients except for the seed oils that Chipotle used to cook their meat in. But I had carnitas a couple days ago when I was hungover for New Year's, and actually I didn't get sick from that. So maybe they switched out of the seed oils then. But
Yeah.
so the consumer and a lot of consumers though for your point here, Aaron, a lot of the consumers, a lot of them are tapped out. I mean, we just see this. There's a ton of different headlines. So the you have weak dollar, asset price inflation that doesn't benefit the majority of people out there. The real economy has been disproportionately hurt from inflation, stagflation, asset price inflation, the tariffs. They hurt small business, I would say, way worse than they hurt large corporations. Very similar to the pandemic, you know, where a lot of small businesses were shut down because these small business owners, their customers, a lot of cases, their customers got hit with higher cost of living, higher interest rates on their credit cards, student loan debt payments, all those things, and so the small businesses on Main Street got double or triple whammied from the tariffs, inflation, higher interest rates.
Yeah, and there's a lot of
But the metal you want sorry, you wanted to I went off a little on tangent. You wanted to know about the metals prices and substitution or if it's going to hurt demand.
can it hurt?
Um
Yeah, can it hurt, the
Look, I
company,
hope I'm wrong on this. I
corporate
hope I'm wrong on
profits.
this, but Sam Altman was in Washington D.C. working both political parties in Congress trying to negotiate like a backstop. So government subsidies or bailouts. So this was what November? He was here for a while. Because OpenAI, they were the leader. They were the first mover. They were the leader.
Yeah.
They've fallen behind. Google, with Nano Banana VEO3, their text to video Gemini 3,
Well,
they've overtaken.
once he had that presentation where the like host questioned him like, how is your revenue going to do this? And he just like snapped and like he basically like exposed himself as to like how fraudulent his numbers were. I think
Well,
that's where the
even
turning point
Nvidia.
kind of was.
Look, I'm not predicting any bankruptcy for Nvidia. Even Nvidia's hedging because Nvidia just went and bought another company for around 20 billion. It's the Acquihire or acquisition hire. They bought a smaller company, the GROQ, not GROK, because there's two Groks. I didn't know there was two, and there's a lawsuit. So you have the Elon Musk, the AI software called GROK Grok, and then you have GROQ, the other Grok that was founded by Jonathan Ross. He was at Google. He's considered a genius. He invented the TPUs. So those are the alternatives to the NVIDIA GPUs where they're more efficient and they use way less electricity and energy per chip. So the chips are 40 to 50% cheaper. So now you're seeing all the tech companies and the artificial intelligence software companies, Aaron, they're all starting to hedge and they're all starting to diversify away from the NVIDIA GPU, which was good for the early first inning of the artificial
Yeah.
intelligence software. But now the companies like Google, Amazon, Meta, Anthropic, XAI, they're all starting to diversify and look for more efficient and cheaper chips that use way less electricity than the NVIDIA GPUs per chip.
Right. Because NVIDIA had a monopoly and they're tired of, dealing with that. And I mean,
Yep.
heck, even Buffett bought Google recently.
Yes, yes.
So,
So Berkshire bought Google, and Google has a bunch of other. So Google also owns. People are not aware of this, Aaron. Google owns like 8% of SpaceX. So they own, and
yeah.
SpaceX is going to go IPO this year. So Google has almost $1 trillion. It's like I think 800 billion estimates. Their valuation is worth a lot. I think they put in like $1 billion initially into SpaceX, and I think they got like a 800x or something like that,
Yeah, I know.
or
I know.
8,000. It
Oh,
was up enormously.
I
Sorry.
think I think OpenAI was, as of a few months ago, was supposed to be like 800 billion, but it might be lesser now.
Yeah, I was. I don't. Let's just say
We'll
I don't
see.
think Open as a standalone business. I don't think OpenAI is going to make it. I think like it's probably going to end up getting bought by a larger
No,
tech
got
company.
acquired, yeah.
Yeah, well, it'll be like Meta or
And
Microsoft.
nobody's
So,
going to pay 800 billion for it. I'll tell you that right now.
well, they don't have the cash flow.
Nobody's
I
got
don't
that
know.
cash. Yeah.
Well, I don't know. They're losing paying customers because they're like, there's tons of models available. The learning language models, the AI software, that's either cheaper per month for the pro version or it's free. So I don't know how they're going to make money. They were one of the only companies at first, but they lost first mover advantage. And when a company that has as much profits as Google, because Google has tons of free cash flow from Google search for the ads and from YouTube, and Meta has tons of free cash flow from Instagram, you can't really compete if you have no profits and you're losing cash flow negative. You're not going to be able to compete with those companies for very long if they decide they want to compete with you. They're just going to destroy you
Oh,
on
and
resources.
they can just, yeah, they can compete with them easily.
Well, it took what a couple years, and Google's already taken the lead, and they're not even using NVIDIA chips anymore. Google, all their software was all trained on their own TPU chips, and now so Amazon and those guys are all diversifying away from only using NVIDIA chips.
Yeah, and
So,
Nvidia's sitting on, all thousands and thousands of inventory that can't even be used yet because the data centers aren't ready for them. And
yep, and
by the
NVIDIA is
time that they're
already
ready,
talking.
they're going to be obsolete by the time they're even ready.
Yep, and NVIDIA is talking about the next generation of chips. What they have different ones that can come out over the next couple years. You have it's I can't tell you who's going to win the chip race, but I can tell you that it's going to be beneficial deflation and a lot of creative destruction. And the real beneficiaries of all this software increases are probably going to be businesses in other industries that are able to be more productive with artificial intelligence software and have
Right.
their employees adapt to it. Those are the ones who are going to benefit while
Yeah,
this
because
money is so these things are actually from a financial history perspective, Aaron. This is very similar. This infrastructure waste, boom and bust, the amount of waste is going to be similar to like the railroads in the United States after the Civil War, where there was a
yeah,
ton of bailouts and they built railroads to nowhere and those railroad companies went bankrupt. Unfortunately, I think I see a lot of the same things that are going to happen.
right. It's like it's the consumer ultimately benefits, and then the consumer in this case is the other business, right? Let the tech companies bleed their pockets dry trying to figure out what's best, and in the process, they're going to create, an AI robot that, a factory can all of a sudden like 10x their value, in production out of, right?
Yeah, yeah.
And
Well,
they don't
I
have to
think
spend any money on it because like the company's just going to create it for them. They're going to make it cheap because it's going to be competition, and then they're just going to be able to buy it.
Well, I think Google will be fine. So Google is not, maybe they're not going to be the most efficient at building this out, but I think since they have profits, free cash flow from other businesses and other industries, I think they're going to be fine. They can use some of that to subsidize the growth, their improvement in their chips, their alternative chips with the TPUs, improve processing power, improve their software for the regular Gemini 3. That's a regular AI software, and then also their text to video, which is like a Nano Banana. I don't know if you've seen that. So like you have the stuff coming out of that is amazing. The quality of the graphics. Now they can only do short videos for a cheap price. Otherwise, you have to spend a lot, 6 or 7 figures to make like a 10 or 20 minute short video.
Yeah,
So
it's certainly it's it it's definitely expensive now, but it'll get better though. It's going to get better and it's going to get cheaper. That's the exciting
Well,
part.
even if the chips get cheaper, Aaron, I think overall they're going to use more chips because the data centers are scaling up from initially they thought 100,000 chips at a data center, like a large neural network, was impossible. And we're already to 200,000 at the next generation data centers and scaling up to 1 million. So we're going to be
Yeah.
using now that's if hopefully things are more efficient. Hopefully we're not destroying the water. Hopefully we can recycle, disgusting wastewater and turn that into usable water for our semiconductor foundries and our data centers and our power supply. So hopefully we learn to use our resources more efficiently to where we're not wasting electricity. We're more efficient with electricity generation. But overall, energy, raw materials for all these data centers, chips, robots, drones, all these new technologies. I think that's going to be a long-term bull market for those things. I can't tell you if copper is going to be the main beneficiary of this because I know that they're already working on using graphene in a lot of instances at the data centers. They're already working on cheaper alternatives. So we could see a substitution here of some of the materials, but overall, they are focusing on improvement, productivity improvement, and efficiency, reducing the amount of water that's used, recycling water, and focusing on what more productivity and less electricity usage per chip. So I think that's like the main goal, and they're all trying to do that now. All the tech companies and the companies building out the data centers. But I think the beneficiaries are going to be what your oil, natural gas, key materials, and I think that's why the U.S. and China are in such a huge scramble. And that's like the main overarching theme that I got wrong in 2025, and I think we're going to start to see even more so in 2026. So the people that are saying that like, oh, this is a bubble top in silver and silver is going to crash and silver's never going to go up again. I mean, I'm actually seeing people write that. Not talking about what the global money supply, the problems in the government bond market, how all these currencies are being debased. I mean, if people want to see currency debasement, it's even worse in Japan. Go and look up the gold price in Japanese yen. It's even more parabolic than the US dollar gold price.
Yeah, speaking of Japan, I'm just reading right now, the 20-year Japanese bond yield just hit an all-time high. Like as we're as we're doing this right now.
Well, are they doing QE? Are they monetizing more debt or stimulus? I mean, they don't have good options here, and obviously, I don't think the U.S. government wants them selling treasuries. They do have that permanent foreign repo facility for central banks. I don't think they've posted any of the treasuries as collateral though to go get access to dollars.
I'm looking at the yen right now. It is getting hammered. I mean, the dollar right now versus the yeah dollar versus the yen is ripping right now.
Not a
So
good time to be a
no,
bond fund manager, is it,
no,
Aaron?
no, not at all.
Well, not unless you're spending over hundreds of thousands of dollars a year on marketing budget on YouTube videos to obfuscate your track record
No,
or hiring consultants,
yeah.
marketing consultants to
You
rebrand
know,
yourself.
the other thing I thought was funny was earlier in 2025 when they were talking about like, oh, all this money is going back to, these Europeans are putting all their money back into sovereign bonds because of the juicy yields. Like, dude, the yields are juicy for a reason. And it's not a surprise that now in Q4 they had the highest inflows back to the US in risk. I think they had some seller's remorse there. Uh,
Didn't you send me some research that the inflows into US stocks
yeah,
from
it was the
foreign
highest.
capital were the most all time or something?
Yeah, it was like the high, I think I want to say like the most in a quarter ever or something like that. But the outflows, and I predicted that the outflows would come back because they would get FOMO once they saw Nvidia and Google and all those, as I knew that they were gonna, Uncle Scott, as I call him, Scott Besson, I knew he wasn't gonna let the market go down for very long. And that's what they did.
Well, I think the better bets, rather than picking out which company wins the chip race or the robot race or the drone race, not an expert at those things. I think overall we're going to use way more raw materials, way more energy and electricity. So nuclear power is especially like a company like Cameco or one of the energy utility companies that's going to get all these additional business opportunities because of data centers, one of these electrical utility companies. That industry has not had growth for decades. And now all of a sudden they're looking at the most growth they've had in 50, 60, 70 years.
Yeah. Oh, for sure, for sure. But just in general, though, in terms of Europe in foreign stocks, they're buying, index funds in the S&P and things like that.
Yeah, so you asked me about specific metals. I don't want to put like I've said this publicly recently. I don't want to put a price target on gold and silver anymore long term. Tell me when the governments are going to stop monetizing debt, which is creating new currency out of thin air to buy government bonds to try to cap the bond yields so the government doesn't have to cut spending. Or in the case of like the US, where only God knows all the expensive military toys that Trump is going to pay, or the amount of money that's going to be printed to rebuild Venezuela, or money that's going to be printed for additional bailouts across the United States domestically for infrastructure, for the data centers, or other electricity upgrades for nuclear power. Maybe that 250 billion I was talking about, or even to buy Greenland.
Well, and the thing is, the Fed does not have control of the long end at all. Every time that they've cut, the long end just keeps going up. And, these economists and everybody else keeps acting, all these mortgage bros are, oh, the Fed's going to cut, it's going to bring rates down. Every
Are
time they cut,
those
it goes
the
higher.
London going up and steepening? So that means normally recession. But do you think that's bond vigilante saying, "Look, the math doesn't work," and that DC is going to run budget deficits, they're going to do bailouts, they're going to do spending, and inflation or stagflation and asset price inflation is coming? Do you think that's what the bond market is signaling?
Yeah, I think that's it. And the thing is too, we mentioned the 70s earlier. Just so you know, like there was a lot of inflation in the 70s, but there was four recessions. So you can have a recession in an inflationary environment. It is possible. It has happened. And I do think that is probably coming this year, if we're going to be completely honest. But that
Well,
does not mean,
I would argue a lot of those industries we said if the share prices are down 30 or 40%, that industry, like restaurant industry, is in a recession then.
yes.
So if it's a consumer discretionary business or a lot of restaurants, I mean, and they're announcing bad and they're closing down the amount of restaurants and they're firing workers off. I mean, that's signs of recession. So I don't know if it's the whole country officially. I don't know if we'll have an official government recession, but clearly those industries, Aaron, are suffering.
Well, and I think the other key here is again, continue watching the repo market, continue watching private credit. If private credit and not just private credit, but the companies specifically, right? Blackstone, Jeffries. We know that Jeffries is in trouble. There was a few others. Aris Capital Management. These guys are big private lenders. They're
All the
not,
private equity too, supposedly, from what I've heard, there's an
yes,
insurance
yep,
company sitting on this private credit garbage. So the insurance companies bought data center debt and a lot of this
yep.
private credit stuff. They were tricked. From what I've heard, university endowments, insurance companies, they were tricked.
Couldn't have happened to a nicer group of guys.
Well, the insurance companies aren't they backed by the U.S. taxpayer? Because there's a bunch of old laws on the books. Well, the bad people are the private equity guys that put this garbage together. So
Yeah,
they're like the Black Rocks and the
yeah.
Blackstones and those are the bad guys that are packaging this garbage, and then they're paying off what the ratings agencies again after they've chopped up these stuff as a income product to rubber stamp it what is AAA, similar to the mortgage-backed securities, 2005, six, and seven.
Yeah, and speaking of mortgage-backed securities, that, from what I hear, is what all those repo spikes were related to. It's all MBS. And again, going back to my anecdote, I can confirm that. I know that there's private lenders that are in trouble right now.
Oh, there's bad auto loan debt too. There's bad credit card debt, auto loan debt. Dude, there was a spike in the buy now, pay later. I mean, I'm sure they've chopped that stuff up too and sold it to pension funds and insurance companies too as an income product, especially pension funds. I mean, the majority of pension fund managers are not very competent. And I'm being nice.
I can tell you right now, there are property management firms that are selling homes in the Tampa Bay area, which is one of the hottest markets you can ever find, right? And they're selling them for a loss. I'm not kidding.
Wow.
I'm not kidding. And I mean, I can't get into specifics, but I can confirm that. And that's how that, and maybe this is just isolated to here, but my guess is that's not true.
No,
Based
they'll
on what I'm
probably
seeing in repo and everything, I can't imagine it's isolated.
There'll probably be a new government-sponsored subsidy program or a new type of extend and pretend. I mean, they did games like that
That's
with the
why
home
they're that's
builders.
yeah, that's why I'm telling you, that's why Trump's doing the whole, oh, we got to buy another 200 billion of MBS the day after he says, oh, well, we're not going to let BlackRock buy all these. Yeah, right. Excuse you, so you're going to let the mortgage market collapse? Okay, yeah. And then the next day he announces 200 billion in MBS buying.
Well, they
I
also
mean,
secretly subsidized the commercial real estate developers to transition the commercial office space over to residential. So they snuck in a bunch of
yeah,
programs over the
yeah,
last couple of years too.
yeah, for sure. Yeah, I mean, there's no way that market is so massive. I mean, there's no way they can let that. It is 100% too big to fail.
So a major theme then for 2026 is more stagflation, more inflation continuing. That when the Trump administration says inflation is not going to be a problem, we have inflation under control. You don't believe in them because look at the military. I look at the military spending. I mean, what we're up to with all the increase in spending added in Venezuela or Greenland, the upgrades in new technology, the naval fleet upgrades that Trump wants. I mean, we're at $1 trillion a year
How many
for the
greenbacks does
military.
it take to get Greenland? Let's get it.
Well, I mean, if it's just paper and you can buy
Yeah.
land, I mean, like that's the fraudulent system we have with fiat currencies, right?
Yeah.
So I remember. I was getting arguments. I'll share this anecdotal story. I used to have people because I was networking like many, many years ago, and I met like a metals expert, commodities broker, and the guy was like, he was working, I think, in Chicago on like the CME exchange, and the guy was adamant that the silver price would never go above $20. Now this was like 2012 or 13. It was like, oh, there's so much silver above ground, and we could bring on new silver mines, and he was like, silver will never go above 20, and I was like, what? He's like, I've been selling silver futures contracts and arranging delivery for my whole career, and I'll never go above $20. And I was like, do you understand economics?
Yeah. Oh man.
Well, I mean, like,
Yeah.
look, the major driver here is actually for the last like 5 or 6 years has been industrial end users. If you pull up a chart of industrial demand for silver, it's been steadily growing while supply, according to the Silver Institute, has been in a substantial deficit now for the last 4 or 5 years. So if you're just going to talk about supply and demand for silver, we're going to hit this at some point because you can't have large deficits where demand is growing enormously and there's supply deficits for 4 or 5 years, the price was going to have to go up to incentivize what investment and new supply being brought online.
Right. And just everything else, going up, and input cost wise, even just the general level of inflation over time, the mining company's they need to get a yield, right? They need to get a yield for what they're doing, right?
Well, especially because like the silver miners, like for years, needed way higher silver prices, and the silver price was capped at such a low level that just to survive, a lot of those silver miners had to go buy a gold mine. So
Yeah.
for many, many years,
Yeah,
a
it
lot
was
of the
bad.
silver.
It was bad.
Well, they were giving
Yeah.
they a lot of them shut down the silver mine or they drastically reduced their production because they were running the mine at a loss or barely break even. It was not sustainable at all.
Right. And in a business, it's already hard enough. I mean, there's so many problems
Well,
that can
and this
happen.
is why you and me were saying that platinum and palladium would rally because
Yep.
what 12,
Yep.
8, 12, 18 months ago, what we had $900 an ounce each one for platinum and palladium,
Oh, yeah.
and I was
That,
getting people telling me it'll never go up again. I was
yeah.
like,
Yeah.
the miners are all running at losses.
Palladium was my little pet project there, and it finally broke out. It took it a while, but it was one if you stuck with it, it was rewarding.
Wasn't the bear market, I think, was like 3 years.
Yeah,
So in hindsight, it was a
it's not that
brutal
bad.
3 year.
Yeah, but like it's considering what it did before that, it's like that's a pretty standard. It was a pretty standard cycle. Now you
Well,
got
I
platinum at
remember,
all-time highs too.
yeah, and I remember before the rally, what BHP Billiton, one of the larger miners, it was Rio Tinto or BHP Billiton, they wanted to do an acquisition of a copper miner, but they had a massive amount of platinum and palladium, and they wanted zero exposure to it. And I was thinking, like, they're probably going to regret that 12, 18 months from now. And now here we are. I think they did get rid of that asset and they sold it at the bottom for pennies, pennies on the dollar.
Yeah, that's that's a tough one there.
Well, I mean,
At all-time highs now.
this is why like contrarian value investors
This
like
is
Rick
yeah.
Rule, this is why they make so much money buying in the bear market, because when the markets turn, that's when you make the majority of your money. And normally as an investor or a speculator, when you make the most money is when you buy the assets and then you patiently wait or you accumulate something that's cheap and hated, and then the cycle turns or there's unexpected growth, like with uranium and nuclear power, how like, 3 or 4 years ago, no one saw that there was going to be advancements in artificial intelligence and data centers and the amount of power requirements. And now it looks like what the electrical utility companies, natural gas, and nuclear power are going to be some of the main beneficiaries of all that over for many, many years to come.
Right, and that's the thing with if something's hated enough, it doesn't even need to have an insane amount of growth potential. If there's just enough of an upside surprise and everyone's short, you're gonna get paid on that.
Yeah, so for long-term price targets and gold and silver, I won't give any long-term. Tell me if the governments are going to stop printing money, but for 2026, I think we're going to blow through 5,000 gold
Well, it's not, yeah, it's
by
not even
by
that
by the
far
end of
right now.
2026.
Yeah, only a couple hundred more at this point.
Yeah, and I think the new normal for look, silver has to stay above 65, 70, $80. It has to stay above. They're probably even triple digits, and it has to stay high for mining companies to bring new supply online. And you have to the other major component from me interviewing, a lot of these gold and silver stock newsletter writers like Adrian Day and Lobo Tigre, who travels all over the place, and Don Durrett, and some of the others, is that I asked them about geopolitical risk, because it's not just about the high metals prices. You also have to have private property rights in a country like Bolivia or
Yeah,
Argentina. You have to have the right conditions in place. So the mining company, so even if the metals prices are high, if there's not good private property rights and other infrastructure and the right amount of labor and all these other things in place, the mining company's not going to make any investments in new supply. This is the issue with mining, that the average hedge fund manager who says, oh, silver is way overbought on RSI, all time RSI overbought, and it's going to crash and then it's never going to go up again. This is what they don't understand, is that the supply response. Yes, people are selling junk silver right now here in the United States out of desperation for cash. There's a lot of people in the United States and other countries liquidating their silver antiques, silver bars. Some people are desperate, but for like mine supply to come online, it has to stay at those levels, and it could take many, many years. The supply response is not going to be like oil, where if the oil price is high for $130 a barrel, Aaron, they could bring on new wells in 6 to 8 weeks.
yeah, it doesn't take long.
So mining is very, very different, especially in countries that have new rules, regulations, environmental regulations. So like Mexico, which has a lot of silver, to get the permitting process for an open pit mine, a sizable one that has like uh, copper, gold, silver, or silver, lead, and zinc, like base metal mines, you'll have to go through a lot of permitting. It could take years for the permits, and then you have to build a mine. Then you have to raise the capital. You have to build. You have to construction could take years depending on the size of the mine. So you're seeing that right now with the massive platinum and palladium mine in South Africa that's coming online. Just came online a couple months ago. That's Plat Reef.
Yeah,
So
yep.
that's from Ivanhoe. That one I was talking about as a speculative play. That's the world class platinum and palladium mine. The phase two of the mine is going to be one of the largest in the world. So it's going to be high grade and low cost platinum and palladium mine. That mine took years to plan and build, many, many years. It's absolutely massive. So the construction cost, years, billions of dollars, not cheap.
Yeah. I think it's PGM, right?
The mine or the miner, Ivanhoe?
Lunar. Yeah.
The mine is Ivanhoe Mines. It's run by Robert Friedland.
I remember you talking about that. That's why.
The phase one of the mine just came online. That's small. Phase two is under construction, so that'll be online probably. They're estimating like sometime in 2027. Then, by then, the projections are it will be the highest grade and lowest cost platinum and palladium mine in the world. and most of the mine is mechanized or automated.
Oh, that's nice.
Well, it is in South Africa though, so it has to be like
Yeah, that's
there's
true.
a armed military militia guarding it, guarding the mine. But you have to
Well,
go where the metals are, right? So I mean,
yeah,
that's why they're even talking about Venezuela, which and then Bolivia. So I think the guy who was I don't know if he's still there, the one who was a plant from Chavez or Maduro, the one in Bolivia. There was like a copycat, one of the puppets for Chavez or Maduro that was in Bolivia. I'm not sure if he's still there. But like Bolivia, I think saw what was going to happen in Venezuela, and now they're talking about like,
yeah.
well,
They got in line. Yeah,
maybe we should start negotiating a trade deal, and maybe we should start opening up to foreign investment. So,
yeah. You got to kiss the ring.
well, they should want to. I mean, there's their mines are worth billions of dollars. They have billions of dollars of metal there. That's jobs, tax revenue, investments into infrastructure, schools, clean water. So, if the mining companies can make the investments into the infrastructure and the schools and stuff, they just have to agree on terms. But just banning, banning investment into your country or banning mine, it's stupid.
Right,
It's it
especially if it could be competently done.
Well, yeah, as long as you invest in the local community and you upgrade their infrastructure and schools and you hire local people and train them, I don't see a problem with it. But we'll see how Latin America decides to do it. There's some mines, Aaron, especially silver mines. There's some silver mines like the one in Guatemala, so Escobal. That mine's on care and maintenance. It hasn't restarted yet. That's worth many billions of dollars. Pan American Silver has that one, and then Pan American Silver has the La Navidad silver mine in Argentina. That's worth many, many billions of dollars, over 500 million ounces of silver reserves, maybe even more than that. They haven't drilled it in a while. So that might have like way over 500 million ounces of silver reserves at a very high grade. They're not, that's bit many billions of dollars it's worth.
Yeah, yeah,
So these countries are not using their assets properly. We'll see what happens here. But hey, if that supply doesn't come online, we're looking at the new normal. Probably these governments are going to keep monetizing government debt. The currency supply is going to keep growing. We're going to be looking at the new normal, $60 to $100 silver, maybe even
yeah,
higher than that.
yeah. I mean, and, there'll be I'm sure there'll be a correction, a sharp correction at some point, but there's higher floors. That's really the takeaway.
Number one, currency debasement. So that's one of the thing. But the other issue is like the industrial usage, and then the price has to stay higher with higher floors, like you said, or there's no incentive to bring on new supply. So we're seeing people like, oh, everyone's just going to sell their silver antiques and the silver bars and coins, and it's going to get melted down. That's a one-off. So if you sell all of your silver coins, your bars, your silver antique, your silver jewelry, your silver cutlery, your antiques, that's a one time. It's gone. You don't get to
And
to
most
go
people
to
don't
that
even
well
have
anymore.
that. Most people don't even have that much of that anyway.
Well, what's funny, Aaron, is I was researching this over the last couple days, and there's a ton of stories out that literally like the pawnbrokers and the
Uh,
um and the antique dealers, they're getting like entire inventories, like every single piece of silver, like antique jewelry, coins. But some people are just liquidating everything because they need the cash, so they're getting like an insane amount in. But they're like, well, that's not gonna make a huge dent in the demand for industrial usage, and that's a
yeah,
one-off.
yeah. It's nowhere close.
Yeah, so
Uh,
the people that are predicting, silver crashes back down to 25, 30, I don't think so. I definitely do not think so. And if they were, I would be a dip buyer. So
yeah.
if it gets back down to, below 50, I would strongly consider to adding to positions again.
You would need to have the 10-year bid. There'd have to be like an actual contraction fear,
You mean
which it's
you mean
po
a bank failure, like a credit freeze
yeah,
up?
it's possible. I mean, it's possible. It just won't last very long. That's why you want to be a dip buyer if that happens.
Oh yeah, I agree. I agree. Trump, and
It's certainly
whichever
possible
puppet.
though.
Yeah, I agree. Whichever Fed chairman Trump installs as his puppet, and the Trump administration, they'll print. So even if the Democrats win the midterms in 2026, we'll see
Yeah,
more printing.
Yeah.
It won't be on the same projects necessarily, but I think both political parties are spenders, tax and spend or tax and borrow and spend.
And lie.
Oh, steal,
Yeah.
stagflate tax lie. Yep.
Yeah. Waste,
Well,
fraud,
I mean, like,
corruption.
well, did I was watching Fox Business today, and I was seeing literally, I think it was Steve Moore and Art Laffer were both on, and other people, and they were with a straight face. They were like, the U.S. is going to have 4% GDP growth, and we might even have 5. And I was like, what? I was like, how much government spending are they projecting? How much inflation?
Yeah. Did you hear Trump? It was like a month ago. He said something like, this is there's no excuse why GDP can't be 20%. I was like, do you know what you just said?
Hey, let's just
Yeah.
invent a number. Let's just
Yeah.
like the Chinese Communist Party or the
Yeah.
Soviet Union. Let's just invent a number and say GDP
Yeah.
is 20.
Yeah.
Meanwhile, all the foreigners are going to be like, okay, buy gold, buy gold, buy gold,
Yeah.
gold stocks. If he wants 20%, the amount of bailouts and money printing and infrastructure, we're looking at like 8 or 9,000 gold pretty quick. If he
Yeah.
wants to get up to 20% GDP,
Yeah.
we're gonna.
He doesn't know what he said. That's what it comes down to.
Well, what an interesting time we live in, my friend here, with all these technology advancements on top of this and stagflate tax lie. But in terms of bargains and risk reward, what are you looking at for 2026 for good value here? Because gold broke out in 2025. We had a big move. Do you see any other commodity or sector or industry that could potentially have a similar move to the gold and silver companies from early 2025 to right now?
Yeah, I would say I think robotics, like specifically, um, the not just like like drones, but specifically companies making the robotics for like all sorts of commercial uses. I think that's going to be kind of the next. I know that they've already had a little bit of a chase, but I think that's kind of your next like really big mover. There's also I'll throw a little obscure one out
Is
there.
there an ETF one for that? Is it BOTZ bots? Is that the
I,
robot
I
ETF?
I think so. Yeah.
Let me see here
Yes,
if
it
I.
is. Yeah.
Yeah, it's bots.
Yeah.
BOTZ
Yeah.
bots.
Yeah.
There's also a spin-off from ABB. That's the European manufacturer. They spun off their robotics unit. Those are the manufacturing ones. But there's a ton of robot companies. So you have like Figure AI, which is doing a lot. They have the robots that are working in BMW factories in South Carolina that have been running for over 6 months. So I think like the manufacturing and industrial robots will be the most consistent and most profitable ones first. I don't know about the home ones. I wouldn't invest in those right now.
Yeah. I'll throw out another one, little bonus here. I don't know if this is going to be a 20x or anything like that, but I'll say I'm interested in it. Um, Discord is set to do an IPO this year, a secret IPO. They should be valued at 15 billion. And they, a couple of years ago, and a lot of people don't know this, they turned down Microsoft for 4 billion. So now they've, essentially quadrupled their valuation. I don't know if they will do this, but I think personally, if they did the right things, they could overtake text messaging.
Okay,
But
so that's like the encrypted chat Discord where you have like
yeah,
some of the group.
streaming and yeah, things like that.
Okay.
Yeah.
No, I can see it.
I don't know if they're going to do it, but I think if they did the right things, they could overtake text messaging.
Yeah, I don't know what any of their financials are, if they're cash flow positive, free cash. I don't know any of that offhand. I know SpaceX is the big IPO, and then the AI companies, so Anthropic, which is backed by a lot of the big tech companies, and OpenAI. But yeah, I'm avoiding OpenAI. I do use ChatGPT now, so I make these economic cartoons for the YouTube video thumbnails and the memes. But who knows? I might switch eventually to another AI program. So I've been playing around now for 7 or 8 months, I think, with the AI software, making like economic cartoons and memes. No, you like some of them, so
Yeah.
yeah, I'm not sure if President Trump and the Trump administration. I saw him copy one of them. He copied one of the Jerome Powell "you're fired" ones, like literally exactly. He scanned like the whole thing, and it was up on his True Social.
I like using the one with him at the construction site, him and Powell.
Oh, where they have like the
Yeah. The
YMCA
hard
and they're doing
hats
the
on,
dance with the
yeah.
Doge dog. Yeah.
Yeah.
I mean, like they're already lying about like the amount of money that was going to be spent for the Federal Reserve with the construction. I thought it was 4 billion estimates, and then on the news today they were saying 2.7 billion.
Oh, what a crime compared to like literally everything else that's happened.
Okay, so
Like,
let me add in. You mentioned robots, like so bots. Is there a drone ETF yet? Is there like a sector, industry, a sector specific drone ETF yet?
I believe there is. I'm
I
drawing a
haven't. Yeah, I
blank on
didn't.
it.
I didn't check on it in the last couple weeks, so I don't have it on my watch list. I have the robot one and the ABB spinoff. I don't think some of the other robot companies are publicly traded yet,
I
but we
think
could see over the next couple years. I know Unitree
there's a,
Robots,
okay,
the
there is a
Chinese
new
one.
one. There's a new one, DRNZ. It's pretty new. It's only been out for 2 months
Okay. Oh, so
on
it's not very
drones.
liquid then. Okay, so it
Yeah.
just
It
launched.
looks let's see, volume. It looks fairly, it's decent. It's not like super thin. It's still new though.
Well, let me add to your
And you
theme
got
here.
UAV. That's another one.
So
I
the
believe, I
supply
think.
chains have to be
Oh,
reshored, and on top of those new technologies, which are going to create additional demand growth, that's going to be for the rare earth value chain. So the rare earth mining companies, there's plenty of rare earths. It's not an issue, and most of the rare earth mining companies, they actually have to store a lot of the thorium as a byproduct. There's no commercial product for it, not right now anyway. There's a liquid fluoride molten salt thorium reactor in the future, maybe, so they have to store all that thorium byproduct because there's uranium or thorium as a radioactive byproduct with all the rare earths. So I'm not big on the rare earth mining. I'm looking at the value chain companies in the rare earths that are going to be reshored here in the United States because you're starting to see announcements of deals of German rare earth companies building a facility, I think, in South Carolina. There's a Brazilian one that has a joint venture deal with Virginia Tech University that's going to be opening up a processing facility, I think, in Louisiana area next to the cheaper natural gas. So that's going to be, and the profit margins for those, gross profit margins, I was researching for the rare earths value chain. So these are companies that do more value added work. It's more difficult. You need a chemistry background, engineering, better technical people. But if you can make rare earth permanent magnets with heavy rare earths or recycle old electronics waste rare earths, into better versions of rare earth magnets for all the new technologies. So the rare earth magnets go into literally all the electronics. They're going to be in a lot of the robots. They're going to be in the drones. They use rare earth magnets for data center cooling fans. They're going to be in pretty much everything. The gross profit margins, Aaron, are between a lot of the value chain companies, 30 to 40%, but it's heavy manufacturing though, and you need a lot of technical expertise. So it's not easy. It's not an easy business. You need a lot of technical expertise.
yeah.
So that's a potential there. So we're going to need more materials. I'm even starting to see, remember graphene? So like everyone's like, oh, graphene's going to be the best material. And then for like 10 or 15 years, there was no real uses for it. Well,
Right.
apparently, finally, they've kind of figured out all the problems in the lab with manufacturing because they couldn't manufacture the right graphene that they needed. There were issues with purity, similar to semiconductors, actually. So all the heavy manufacturing in the value chains that are coming back to the United States are reshoring in more friendly countries that in North America, so that the U.S. could import from here in the Western Hemisphere. Those companies will benefit, I think, from the era of the just-in-time supply chain ending.
Right,
So
right.
I would look to
Yeah.
target those as investments. The Taiwan Semiconductor, I think I just heard that Taiwan Semiconductor is going to get additional funding to open up more Arizona facilities. I think they're going to be moving even more of their facilities here in the United States.
That's the plan the administration has that and it can't be clearer to me.
Well, and why Intel got a bailout, right? So, because
Right.
like they were worried if they didn't bail out Intel that we wouldn't have enough semiconductors, and they wanted to give the new CEO at Intel time with the investment from Nvidia to turn around their business, so they would have plenty of supply, semiconductor supply. I think Intel did a. There's actually good reviews though. What Intel, some of their new product innovations were at the Las Vegas Consumer Electronics Show last week. So
Interesting. Yeah, I mean they were man, a dunce of a company for a very long time.
Well, but there it looks like the turnaround now. Free market, they probably would have went bankrupt.
I was going to say, I mean, it's amazing what happens when, you're given billions of dollars for failing, but yeah.
Well, they appear to have used the capital and the time wisely with the new CEO, and they're looking like they're going to turn around. So, our tech companies like Qualcomm, Broadcom, Taiwan Semiconductor moving here, Intel, these companies look like they're going to benefit from the reshoring and the technology upgrades. But overall, I think a major theme here with the new technologies, we were drastically underinvested, Aaron, in infrastructure, in electricity, energy, key energy, reliable baseload electricity, raw materials. We just didn't understand the amount of stuff we needed to build out the new technologies. And I think now, if you listen to the interviews, Aaron, from these tech people, they all, like the people running these tech companies, they all get it now. That's going to be the major choke point for the data centers and the better chips, the better AI software, that we just didn't have the energy and infrastructure needed to keep building this out.
Well, it's because we outsourced dollars for so many years instead of actually investing in it ourselves.
Well, we outsourced everything, right? So
Yeah,
the dollars, what we just printed dollars to buy stuff.
right.
that was
Which
the
which is
global
great
reserve.
if you can. It's great if you can do that, but you should also, like hedge that with a longer term, you know, it's just infrastructure plans.
Well, I mean, you can't print dollars to buy stuff forever because then most
Right,
Americans are not going to end up with jobs.
right. And that's literally where we're at. They're losing their jobs to AI now. So
Well, even before the AI, I mean, the economy was already had been hollowed out, right, with a lot of the just-in-time supply chain and outsourcing. So,
yeah,
but if other countries, what if China is going to put export bans on strategic metals, rare earths, and then the U.S. is going to counter that with additional policy, then you're going to be in an era where global trade, more free markets. That era is ending, unfortunately.
yeah. It's a lot of deglobalization going on, a lot of protectionism.
And that means higher costs. So
Yep,
I wouldn't believe the
yep.
consumer price. It means higher costs, but that means potentially more investment opportunities locally and more jobs for people who have a specialty.
Yeah.
So any more things that we didn't bring up, Aaron? I knew you were talking about healthcare, right? So you were talking about a healthcare rally.
I had
Are
said, yeah, nobody wanted to listen. I told you to buy XLV, last summer, and it's at all-time highs now. And then this was simply based off of rotation and based off of just healthcare stocks, blue chips. Everybody hated them, and you get a chance to buy a blue chip below its monthly 50 MA in an uptrend. You just buy it. You don't really have to think about it. Just buy it. And it took really like a good half of the year, but we're at all-time highs now with the XLV, and I've actually had a really nice trade on NVO on Norodisk recently. Actually, a couple of trades we just got out of for a nice gain, though. I've liked that level in the mid 40s, and it's just trading at 60 right now, so that was a nice one for us.
Yeah, so for risk reward, undervalued growth stocks, I think like maybe I'll be wrong again, but I think we will have a oil rally by maybe Q2 or Q3 2026.
Yeah,
And the
I
value,
would think it's got to be. I mean, it's got to be at some point here.
well, I don't know if we'll get to 85 because I think then you'll see additional policies announced, but or more supply
Yeah.
could come back online. But I know the assets, the valuations are cheap. So Canadian companies, so like a Whitecap or some of these other Canadian companies that went and did acquisitions, they went and bought assets cheap. They're focusing on cutting a lot of the fat out, running operations more efficiently. They're not, increasing new supply right now. So they're focusing on becoming more efficient with their businesses. And Chevron and ExxonMobil are kind of they're the main ones, but there's better valuations out there if you want to go to Canada or deep water or something like that on a rally.
Yeah, I think 85 is reasonable. It's not absurd. Um, yeah, I mean, it's kind of like the midpoint between where we are now and where we were in 2022. So that's pretty fair.
Well, I mean, if they devalue the dollar more, what 85 will be what used to be 65 will have to
Right.
be 85,
And that's
and then
sort of
the gold price will have to be 6 or
Right.
7,000.
That's sort of the base case too, right? Because like if everything else is going up, oil has to go up, right? Or perhaps there's a rotation, maybe there's a rotation where some of the metals take a breather, some of the other commodities take a breather, and then that money rotates into oil, right? And that, because smart money looks for what's not running and it looks to get into that, for whatever the next rotation is.
Yup, I agree. And well, I'm not sure if the manage a lot of the generalist people are in gold stocks yet. A lot of people don't believe the move.
Yeah, that's true as
There's
well.
still a lot of people calling like, "Oh, it's about to crash." Especially for silver. I mean, I hear that all the time. Every single day, I'd be like, "Silver's about to crash." Do you even understand why it went up in the first place?
Yeah, I mean, like I've warned about the chart being parabolic, but I don't think that means that the bull market's over with if it has a correction.
Yeah, I mean, even if it corrects 20 or 30%, I don't think that stops the bull market at all. In fact, I think people will buy the dip, and I would think hardly any new supply will be online. The
Right,
price has to stay substantially at a very, very high price, and we're at $100 an ounce or more in Asia for silver prices. If the silver price stays at triple digits, we can bring on new supply. If it corrects 20 or 30%, some of these projects might get delayed further.
right. And that's the thing too, like the producers are going to want to see where this price settles, if when there is a correction. Is there a range that it can trade in that they can now expect, okay, it's going to be between this price and this price. We can expect it to stay in this range. Right now, it's just uncertainty, right? Because it could have a nasty correction. It could also go up to 100, right? There's a lot of uncertainty there. They're not going to start making investment decisions when the price is in motion like this.
Or they'll make smaller investments. So they'll bring on
Right,
they'll make an incremental increase, say at a mill at an existing mine. And so
right,
they'll expand the mill, they'll expand the production at an existing mine, but in terms of like bringing on a much more expensive silver mine that's way larger, they're probably going to be hesitant to necessarily bring that online if there's a correction in the price.
right, exactly.
But if you're a producer, so if you're an existing producer, I mean, you're minting money right now. So, but I would watch for cash capital allocation for management. So you want to make sure the management team is not going and let's say buying land in Venezuela if with this much uncertainty.
Right.
Yeah, so like let's say some of these mining companies be like, "Oh man, this is going to be the largest deposit ever in Venezuela," but and they go and buy something right now and they overpay for it for a couple of $1 billion, be like, well, we don't know if it's even going to be safe, if there's any infrastructure there or private property rights or safety. So I would be careful where the mining company is allocating the capital.
Right. And if they're getting their government guarantees.
Well, this is why the royalty and streaming companies is such a good business model. They're diversified, especially the larger ones, the larger medium sized ones. They're diversified. And so they're not going to bet the whole company on like one mine in a geopolitically unstable area, or even if there's a mine problem in Canada. And so that happened with a couple gold miners a couple years ago, where there was a open pit gold mine in Canada, and then there was a landslide and the mine collapsed. Or SSR mining in Turkey, where they had financial problems before the gold price rallied.
Yeah, yeah, absolutely.
Well, I want to thank you so much for your time today, Aaron. I think we covered pretty much everything. I think overall, the one asset class that I'm least confident in right now is government bonds. What about you?
Yeah, I'd agree. And that's a longer term thing too. There's nothing saying that, excuse me, that bonds can't have a rally or anything like that. But I mean,
Maybe
it's
yeah,
just a
short
right,
term rally,
right,
maybe.
right. But the trajectory here, the long term trend now is now down here.
Well, I mean, if the M2 global M2, if the M2 is growing that much, what are they? What are the governments and central banks and commercial banks? What are they buying with the new currency? Are they doing bailouts? Are they monetizing government debt? And I would argue that a lot of that currency creation ended up being bailouts and monetizing government debt. And so we've had a lot of currency debasement now for years. And the market, a lot of people are finally starting to figure that out. And that's why the gold and silver prices are parabolic in pretty much every single currency.
Well, and if you have the Fed basically saying that CPI 3% is the new floor, I mean, like, why would anybody want to own bonds?
Especially with all the stuff Trump's saying. I mean, like he's like, it sounds like every couple weeks he's talking about a new expensive project that he wants to spend on.
Yeah, but he says there's no inflation. Okay.
Well, as long as there's cheap oil, there's he claims there's but in Venezuela they had what oil for below $1 a gallon and there was hyperinflation. So
Yeah. Tell that to well, we can't name names, but we know who we're talking about. The people in the comments will know. The
deflationistas. I'm sure
economists, yeah, yeah.
I'm sure there's deflationistas.
Hey, gas was $1 a gallon. There can't be any inflation.
There's one deflationista. He's adamant. There's a couple of them that are adamant. There's been no evidence of any inflation for decades. I don't know
Yeah.
what type of drugs he's doing, but
No, he went to Japan with Yellen and had some of those mushrooms. Yeah.
or the weed brownies.
Right.
She looks like a grandma that
Uh,
that sneaks in a little extra sauce there.
yeah, yeah.
Well, did you see her stage grocery shopping? They staged it to make her look normal. Do you remember this? Like a
No,
couple years ago, she did
no.
it was this.
I remember
Mhm.
Chuck Schumer though, with the piece of cheese on the burger that's not even cooked.
Yeah, he doesn't know how to cook. Yeah, his butler or his personal chef didn't cook it for him. No, that they actually did a staged Janet Yellen grocery shopping. This was a couple of years ago to claim that there
Oh.
was no inflation, and it looked like she hadn't been grocery shopping in a long time. So she went into a giant locally here, and she just stuffed the shopping cart full of potato chips. So like all types of junk food, snack chips, and drink mixes for alcoholic beverage drink mixes. So she's clearly a party animal. She just threw all the party materials into there
Yeah.
for her drugs and alcohol. Okay,
Oh
well,
man.
I want to thank everyone for listening to this long show, listening to us rant. We're going to see a lot more currency debasement. I can't tell you which country is going to win the race to debase, but it's not going to be pretty. There's going to be a lot more stagflate, tax lie, and asset price inflation. The like Aaron, I think the one asset class, whether that's U.S. Treasuries, Japanese government bonds, European debt, Chinese debt, I do not. The one asset class I do not want to have a lot of exposure to is government bonds. There might be a short term trade there, here, or there, but anytime there's deflation or bank problems, there's really nothing in the current system we have now to stop the people in DC from changing the rules, moving the goalposts, doing secret bailouts, overt or covert bailouts on or off balance sheet. And I think, unfortunately, the Federal Reserve Bank is long overdue for doing a 180 and starting to expand its balance sheet again. And normally, when the Fed starts to expand its balance sheet aggressively, that means more inflation.
Yeah, that's usually how it works.
Especially with the money supply growth. Yet in that money, the money supply, we're almost to 100 trillion. So all these people like, oh, deflation is the more likely one. It's like, look at the global M2. It's not just the US. We're up to almost 100 trillion of liquidity sloshing around out there. That's a lot.
Right. And even if it was, they're getting in front of it. Like they're getting in front of anything that could ever be any sort of contractionary force.
Yeah, I would not be surprised if Fannie and Freddie start buying some of that private credit debt. I thought they were going to buy commercial real estate, some of the buildings, but instead what they did is they extended and pretended the loans, so they're not calling in the loans on default. And then the commercial real estate developers, Aaron, are getting like these subsidized loans that were snuck in to transition the commercial real estate building office space to residential now.
Yeah.
So that's what a hidden subsidy or bailout that the taxpayer didn't even get a chance to vote for.
Yep. And they're making them into luxury condos. But
Problem.
yeah, but you have to be, they're like dual purpose. So you got Section 8 and you're, paying for a condo next to a Section 8 resident.
Just all types of distortions that the
Yep.
taxpayer and well, Congress probably did do the subsidies because there's a ton of politicians in both political parties in Congress that take lobbying dollars from a lot of the home builders. Same thing for the healthcare
Yeah.
insurance companies. So
Well, what's his name? Bill Pulte's the head of like the FHA. Like the guy, like Pulte Holmes,
Yeah, yeah.
yeah, that same guy. That's not a conflict of interest at all, right?
Well, I mean, he is a real estate expert, so
Yeah.
Trump does like pick people by resume like that. But yeah, I don't know what the guy's ethics or morals is. So,
All right. I mean, he founded like one of the largest home building companies ever, but
well, our Treasury
it was
Secretary is a George Soros hedge fund manager. I mean, I've listened to him do
yeah.
macro interview. He's a smart dude. He
He
know.
is smart. He is smart. But you can tell the things he has to say. It's like he can't like there's certain things he can't say, and so he sounds stupid sometimes, but it's he knows. He does know. He understands how markets work. But I mean, what's he going to do? Say, "Oh, my hands are tied," and like nobody's
Well,
buying our debt?
before he took the job, I mean, he was saying that the gold price was going to go way higher when he was just a global macro hedge fund manager, and he used to do like macro podcasts. He was talking the gold price was going to go way higher. Recently,
Yeah,
in speeches, I mean, he was talking about asset price inflation and distortions.
yeah. He was talking about like the income disparity and financial repression and all that stuff. He was talking about that last year, even.
Hmm.
So I mean, he knows what he's talking about. But I mean, his hands are tied. There's really not anything
Well,
that
it's also an issue of morals and ethics because I mean, like the Trump family has made billions of dollars in crypto in under five
Yeah,
years, and there's other stuff I won't say publicly right now. The other rumors I haven't confirmed any of them. It's tough to prove or disprove certain of the things I've heard that are
you
gone
mean
against.
like the all the people who bought call options on Lockheed Martin right before the invasion, and I mean like there's a or no, and the Lockheed Martin, I think it was the one they took out an insurance policy on operations in Venice. It was something like that, like a few weeks before they went in there.
Well, look at the Intel trading position, right? So
Right. Oh yeah. Oh
there
yeah.
was a ton of share purchases and options activity prior to the government announcing what the additional bailout for Intel and the Nvidia investment into Intel 5 billion.
Yeah. And this is very widespread with this administration.
Yeah, well, it's the new normal. I would argue that this is what happens when your central bank with the world reserve currency and fiat currencies, when it has too much power and control over the economy and it can do bailouts, and both political parties prefer asset price inflation and getting rich quick.
Yep.
Now, this is the problem with Washington, D.C., all the corruption here, and how easy it is to come to Congress, not provide any value, and then just become a millionaire very, very quickly.
That's the game.
Well, thank you so much for your time. And thanks to our listeners for listening to Aaron and I ran and talk about different markets and asset classes. 2026 is going to be crazy because of the people here in Washington, D.C. and the District of Criminals are crazy. And they're corrupt. Their morals and ethics are highly questionable. And we're probably going to have a new Fed chairman. And they're probably going to want to do balance sheet expansion, maybe even bailouts or quantitative easing. So we'll see what happens. But I think the probability is pretty high. We're going to see Fed balance sheet expansion. Trump's going to lower interest rates on the short end with the new Fed chairman. And then the yield curve, like Aaron said, I think it's going to steepen because I think there's a little bond vigilantes, and the average person looking at this rationally sees the odds for more inflation and currency debasement are quite high.
Yep. Absolutely.